think, act, and prosper. You are now tuned into the Money Level Show.
What are some ways that you hedge your positions? Like for me, like I'm always scared of the next market crash. So I'm buying these long-term options on like SQQQ and some other stuff. And I'm like, hey, I'd rather risk this $200, per option and protect myself rather than, then become a victim of a market crash or something. Like, how do you hedge your positions? Because I don't look at the market daily. I mean, I look at like how my portfolio is doing, but I don't kind of read those trends or whatnot.
Yeah. So for what I do is I don't hedge directly. Like sometimes people will buy calls against a put, a short position or puts against a long position. What I do is I'll have some longs in the market where I buy, like for instance, right now I do like Chinese stocks. Some of them are actually having a really nice day today. But I love the longer term prospect of the Shanghai Composite and the China economy as economic conditions here get less lucrative for investors, meaning the Fed is eventually going to have to tighten because of inflation. Money is going to look for other places to go. I think China is a great place to be. So, stocks like Alibaba, Baidu, Tencent, those type of names are good longs. Overall, I'm short the equity markets, meaning I'm short the S&P, I'm short the NASDAQ up at these ranges because I just think that you're due for a big correction based on all the technicals I'm seeing in the market. So I can show this cool chart here, and this will give everyone a basis for when the markets are going to really break down. So on this chart, this is a chart of the SPY, and it basically is a daily chart. And what you can see is I have two trend lines that are showing themselves. One connects back to the lows from March 2020. So that was the COVID panic lows. And what you see here is it basically kisses or connects through every low since then. And that's the line I'm following. So the market technically is safe as long as you don't see price trade below this line. If price trades below this line, I think you get a very sharp correction as much as 10%. I'll show you where I expect it to go here. The 200 moving average is down around 375 to 380 on the SPY, which is currently trading at 422 and change. So I would expect as much as a 40 to 50 point drop, which would equate to about 10+% on the S&P if this upsloping trend line breaks. So that'll give everyone at home kind of a good basis for what to look for if you're worried about being in the market when it starts to drop. I think you can stay in the market for now, but if that trend line breaks, then I would look to exit or get on the short side for sure.
Okay. That makes a lot of sense. So you have your support and your resistance, and when it breaks through that support line, then that means you may need to consider exiting that position because it could continue to drop.